But whilst most of it, to be fair, most of it when it's recording, it'll be my share screen anyway, so you won't be on there.
Yeah, exactly. So
Right.
there we go. And it actually worked. Look at us. Okay, so hi everybody. I'm really pleased to welcome Tracey Robertson from Small Business Accounts Coach. She's going to be talking today about how to prepare for the tax year end and the most juicy part, how we can save some money on our tax bill. So I will be here monitoring the chat space, but it's all in Tracey's hands. And I will leave it to you, Tracey.
Right, okay, so now we have to do the share screen bit. So let me do that. And oh, where's my Google? Oh, there it is. Look, share that one and increase that one and move you all over there. So can you all just see a big purple screen with a big QT?
Yes,
Yeah,
we can.
lovely, lovely. Right, okay, so yes, so today I am going to do a whistle stop to it, and it will be quite detailed and it will be quite fast, about self-assessment tax returns, and by preparing it'll be less stress and hopefully a bit more money in your pocket. So who is this for? This is for anybody registered with HMRC in the UK as self-employed or a sole trader who is required to do a self-assessment tax return for tax year 23-24, which will end on the 5th of April, which is a week on Friday. And this is whether you're going to do it yourself or whether you're going to pass the details to an accountant to do it, because the more that you can prepare, and the cleaner and more comprehensive details and numbers you give to an accountant, in theory, the easier it is for them and the cheaper your bill will be. So that's the first thing. Who this is not for is if you trade as a limited company, your financial year is likely to be anything but the 5th of April. Although directors still have to do self-assessment tax returns, they generally can't do those until after an accountant has done their financial year ends. However, tax return information and the principles of accounting and things are just about the same. So if that is you, by all means, stick around. So first of all, who am I? For those of you who don't know me, my name is Tracey Robertson and I'm the Small Business Accounts Coach. And I am not an accountant, I am not a tax advisor, and I am not a financial advisor, and I'm also not going to do your work for you. I did start to study as an accountant many years ago. Life got in the way, as it always, as it often does, and I never actually qualified. So therefore, out of respect for all of the marvelous qualified accountants out there, I would never ever call myself an accountant, even though actually to be an accountant, anybody can call themselves an accountant whether they've got any qualifications or not, but I wouldn't do that, as I say, because there's so many out there have spent a lot of time and money and effort to get where they need to be, and they continue to update their CPD, so that they know all the stuff they need to know. But what I do is I know stuff, having worked in accounts in various different guises for probably the best part of 30 years. I know lots and lots of stuff. Most of what I will share with you is my explanation of things that are publicly available. However, HMRC's website particularly is somewhat all over the place and can be very ambiguous and not very clear. And if you start looking at the actual legislation, that is just so techie legally speak that it just will blow your mind. So this will be my explanation of the things that I believe you need to know, based on my experience of working with small business owners, sole traders, over a number of years. I have worked with many, so if you want testimonials from anybody to prove that I can do what I say I can do, I'm happy to share those. And what I will always try and do is make things as simple as possible, so that you get it, so that you understand the bits that apply to you. So let's get stuck in. As you probably already know, the tax year every year runs from the 6th of April to the 5th of April for financial periods ending in that period. So If you are relatively recently registered as a sole trader, your year end is likely to be the 5th of April. Fine. Might be the 31st of March if you like to work in calendar months, that's fine. If you have been a sole trader for a long time, and I mean years and years and years, it's possible that when you started, you may have chosen a financial period that ended 12 months after the date that you started. So that could be any date in the year. If that is you, you need to be aware that they have changed the rules and they want to drag all sole traders into this 5th of April, well, 31st of March, 5th of April year end. So if your current basis period, financial period is not those dates, for 23-24, you're going to need an accountant because there are complicated calculations to do to shorten one period or lengthen one period, but then make sure that you do not overpay or underpay tax. And it is, as I say, quite common. If that is you, give me a shout. Or if you're not sure that's you, give me a shout and we can work it out from your last tax return. But as I say, hopefully most of you will be a 31st of March, 5th of April year end. And as you know, the deadline for filing is the 31st of January the following year. So that's like nearly 10 months after the end of the tax year. Why would you wait? Lots of people think, oh, do my tax return in January. No, you don't do your tax return in January unless you really, really like to be stressed. You know, nobody yet has been able to give me a really sensible reason why you would wait. You know, just so if you got one, by all means, let me know. But at the moment, you know, so you don't wait. If you do it as soon as you can after the 5th of April, you will know how much you're going to need to pay. If you've done it, you don't have to file it then. However, if you file it because, well, you've done it and it's not going to change, you still don't have to pay it till January. So if you have got the figure that you owe and it is more than what you have got saved up already, you've got 10 months to save it up, 9-10 months to save it up without having to go at the revenue. I haven't got enough money, please can I have a payment plan? Because that's never fun. If you have saved up your money and you've got it, or you've got more than enough, you can choose to put it somewhere that will earn you some more money. There are lots of good savings accounts around at the moment, and I'm going to come on to that a little bit later on. If for whatever reason you're due a refund, the sooner you do and file your tax return, the sooner you'll get your refund back. So you see lots of reasons why you should do it as soon as you possibly can. It doesn't have to be the 6th of April, but you know, soon. So as with everything in life, and tutors particularly, you will know this, preparation is the key to stress-free life. So to prepare, because obviously we're not quite at the end of the tax year yet, there are things that you can start doing now. So you will need to gather information from any employments that you have had in the year. You are going to need to gather information from self-employment, and you're going to have to gather information from any other income stream, income source that you have. There are quite a few tax reliefs that may be applicable to you, some of which are time sensitive, and if you don't do them before the 5th of April, you will lose out. You know, that some of them you just can't. Some can be backdated, some cannot. And clearly, as I've already said, if you have some money, you can make it work harder by saving it in the right place, and now's the time to start looking at where that might be. So the first thing that I always recommend people do is, particularly if you only ever log into your government gateway account once a year to do your tax return, is go and log in. Go and find your user ID wherever you saved it in a nice safe place. Make sure that you can get in. Make sure you remember your password. Make sure that you've still got access to the phone number that they send the code to. And make sure you can get in is the first thing. When you're in, if it logs you into your personal tax account, you get these little grey boxes with different things on. And the one that's called self-assessment right now says, view and manage your self-assessment. The deadline is the 31st of January 24, which clearly was 2 months ago, because we're not yet in the next year. So You should have a UTR number up here. If you don't have a UTR number, because perhaps you're new to this, then it possibly means that you haven't actually registered for self-assessment, and you will need to do that. But go and log in, see if that's there. All right. Then if it logs you into your business tax account instead of your personal tax account, then this is the screen you'll get, and it'll say self-assessment here. And this bit down here that says returns, I've blown up over here. This is mine. And right now it says you have no returns to complete. You've filed for 22-23, and it gives me an option. I can go and look at it. I can amend it if I wanted to, if I needed to, and I can get the print off from it. And I have no tax to pay. Woohoo! Or if I did have, I could click there and make a payment. So that's what it says right now. From the 6th of April, that will look different. And the your returns bit will say, now clearly I've used last year's, but where it says tax year 22-23 is ready to complete, clearly that will read 23-24. And to avoid penalties, you must file by 31st of January 25. And the bit you're going to be wanting is this bit here, complete and file tax year 23-24 self-assessment return. And that's the bit you'll be needing to click. But you won't see that page until after the 6th of April, well, on the 6th of April, because that's the soonest you can do this. Then at any point from the 6th of April, you can click that bit there and just go and have a look, fill in the bits that you can fill in. Don't be scared of it. If, you know, this is your first time doing this particularly, or if you just can't quite remember, you can go in and you can put anything in those boxes, anything you like, provided you do not press return at the very, very end. And that page is really obvious. It's got a big submit button in green on it. Provided you don't click that, you can do anything you like up to that point, amend it as many times as you like. It doesn't go anywhere. So don't be scared of it. You can't break it, provided you don't press submit. So first question it's going to ask is, what's your income? Where do you get your money from? How much do you earn? Because obviously that's where they're going to start working out how much tax you owe. Now, income can be anything. So if you have been employed in the year, if the job finished, you'll have a P45. If the job is still ongoing at the 5th of April, you will get a P60 from the employer. Now, they have until the 31st of May to issue those, but in practice, most of them just get them out of the way as soon as they've done month 12 at the end of March or the 5th of April. So you probably won't have to wait that long for it, but you won't be able to do your tax return without it. The reason I've got this big flashing get the PDFs is, if you are employed and your pay slips and P45s and P60s and pensions correspondence all comes on a portal, please go into that portal and download everything that's in there if you have not already done so. Do not rely on the fact that, oh, I can log in and get this anytime I like. I've had many this year where they have left the employment, or the employer has changed systems and they've no longer got access to those portals and to their own information. And that is a real pain, because employers are not obliged to reissue any of that information if they've already done so, and it was your responsibility to secure it for yourself. So go in, download, get those PDFs off for everything that's in there, if that's the case. Self-employment, which is what we're going to focus mainly on today, you are going to need the gross income from each business. So if you run more than one business, so if you are a tutor and you bake cakes, that's 2 businesses. So you're going to need the numbers for each of them separately. And then there are lots of other ways that you may also have income. You might have interest on savings. I'm going to come to this a little bit later on, but if your savings are in an ISA, interest-free tax-free interest savings, then you do not need that information for this. That is irrelevant. You don't have to declare that. But anything that's in a normal savings account that incurs interest, whether it be a few pennies or a few pounds or really good, you're going to need the statements that come. They're normal. If you've got online banking, they normally are attached to the bank statement that comes after the end of the tax year, so whether that's April or May. So you're going to need that. If you have any rental income, so whether you have rent a room scheme, so you have a lodger in your house, whether you have a house or a flat or land that you rent out with tenants, you're going to need that. If you've got any overseas income, child benefit, there is a question about that because it's about the higher charge. So that if an adult living in the same house as partners with those children, whether they're their children or not, earns more than it's about £50,000, there is a way that they're going to claw back some of the child benefit that you may have claimed, even if the person earning the 50,000 is not the person claiming the child benefit. You've probably seen it on the news. They are changing this, but for now and for 23-24, if there is an adult partner in your house earning more than 50,000, you're going to have to put the details in there, and that might have to come back. If you get any other benefits, some are taxable, some are not. So some you will need to declare, some you will not. Pensions. So state pension is a taxable income. Now, clearly, if you were only getting your state pension, most people would not pay tax on that because it would be under the tax-free allowance. But if you add that to any other income, it then becomes part of that taxable income. Private pensions, some of them, depending on how you take that money, will have been taxed before you get it. Some of them will not. You may get a P60 or some kind of statement from the provider, then you're going to need that as well. And absolutely anything else, any other income that you earn or get is going to need to go on your self-assessment. So you can start gathering that information right now. So income from self-employment, as I've already said, needs to be the gross income from each business that you run. So if you invoice your clients, that's going to be really quite simple. You're just going to need a total of the invoices and what you've been paid. If you are paid by PayPal or any of Stripe or Square or SumUp or any of the card payment providers, and maybe you just send a payment link to somebody instead of an invoice, and you receive money that is less than what the client paid, your gross income is what the client paid, and the fees deducted by the provider are an expense. Yeah, you don't declare just the net amount that you receive. That's under declaring income, and that's technically fraud. So yeah, the outcome is the same. Your profit's obviously going to be the same, but it's the declaring the numbers in the right way. If you have had any grants for any reason, obviously in COVID, in the pandemic, lots of people got lots of different grants. Some will be taxable, some will not. Your paperwork agreement will explain if they are or they aren't. If you have borrowed money for your business, the money that you borrow, so the capital, is not income, in the same way that the repayments that you make are not an expense, but I cover that a little bit later on as well. Motor expenses and mileage. If you go out and about to see your clients, or you drive to a conference or training or whatever, then business mileage is an expense that you can claim. And if you haven't already been keeping a log of this, then you might want to start going back through your calendars and things and now working out where you've been. If the vehicle belongs to the business, so if you were a plumber, for example, and you had a van, then you would put all of your costs through because the van is the business, it's a business tool effectively. More likely for tutors is going to be you're going to use your personal car just to go off on an odd journey here and there. And there are two ways of claiming motor expenses if you're using your personal vehicle. The first one, it's a simplified version, so you can guess that's the one I'm going to suggest is the one that you use. You just need to keep a log of all the business journeys that you do, and you can claim 45 pence a mile up to 10,000 miles a year, which is a lot, and then 25 pence above 10,000 miles. You do not need to keep any receipts, no fuel receipts, nothing for that. You just keep that business log and claim that 45p. There is another way of doing this, which is a pro rata way. And what you have to do is keep a log of every single mile that you do in your car, and then work out whether it was business or personal. And then the percentage of business, you can claim that percentage of all of the costs. Except purchase finance, that's a separate thing, and that's not quite so simple. But road tax, insurance, breakdown cover, servicing, MOT, tyres, fuel. But you have to keep every single receipt, including every fuel receipt. So you can see why I would be suggest, especially if you don't do a lot of miles, the simplified version is just much less hassle and much easier. To keep a mileage log, it's literally just going to be this kind of a simple spreadsheet. The date, where you started from, where you went to, why you went, the number of miles times 45p. If this is the first year for the car that you've got, you can choose which of these systems to use. But beware that once you choose which system to use, whether it's simplified or pro rata, you are stuck with that system for the life of that vehicle. Even if it then things change and it becomes more beneficial to choose the other way, tough. So you've got a car, you've already claimed simplified, you're stuck with simplified until you change your car. So just bear that in mind. I have yet, quite honestly, to come across anybody who, unless they did literally thousands and thousands of miles a year, wasn't better off doing the 45p a mile. Even if it was slightly less than what they claim for pro rata, it's the actual admin of it and the hassle of it. I've not found anybody yet where it's just been worth it. Other purchases, basically anything that is a cost of your business, running your business. Now, you might have paper receipts. You might have, if you buy stationery at the local shop or anything like that, you are likely probably these days to get lots of your receipts and invoices on email or electronically. So you'll download them when you order something online. You'll get an email that maybe has an attachment in it, or if it's your phone bill, you'll get an email that says log in and download your bill. I would choose one or the other. Don't have some paper and some electronic, because you'll get in a bit of a pickle. Pick which way you're going to do it and do that. So if you are going to choose electronic and you've got a few bits of paper, just scan them and upload them. Keep a folder on your computer, on your desktop, and I just, as invoices come in on email or whatever, I just download them and whiz all of the PDFs into this folder so they're all in there. It doesn't have to be, you know, in any kind of, if you haven't got hundreds, just one folder with them all in will be fine. If you decide that actually you prefer paper, you're going to have to print them all off and keep a folder with them all in. Okay. If you want to know what you can claim, I do have a PDF which is common allowable expenses for tutors. So if you haven't seen that, by all means, just give me a shout and I'm happy to share that. I think that's on my thing, my hub in QT, but if it's not, I'll go and put it in there. Just basically remember, it's got to be anything that's wholly and exclusively for the needs of your business. And if you're at all not sure, do ask me. So you can start and gather all of your purchase invoices. If you know you've got them, but they're kind of all over the place, just try and gather them all together. And record keeping. If you've just got a nice big pile of paper that you've been gathering for the whole year, you're going to want to try and sort that out. Now, you could just write it all down on bits of paper and add it all up manually. You could just keep a spreadsheet, or you could use account software. Doesn't really matter which you use. It's whatever suits you best and whatever you find easiest. Account software, once the system is set up and running properly, is, in my opinion, as easy as doing your online banking and keeps everything up to date and gives you the numbers you need when you need them. However, I would not recommend anybody at this stage of the financial year to be starting a new online account system now. Do it the way you've always done it. Do it on a spreadsheet, do it on a list. And then if you want to use an online account system, start from April for the new year. You know, if you don't have too many transactions, you could maybe go stretch it to, I don't know, June or even July, even the summer holidays, and start then and backlog it to April. But after that, it becomes, well, you're kind of more than halfway through the year and it's not really worth it. So if you've already got a system, fine, make sure everything's in there, make sure it's up to date. If not, just a simple spreadsheet, or just writing it all down. I mean, a simple spreadsheet effectively is just a list. So even, you know, I mean, if spreadsheets just aren't your thing, just look at it like it's a list. So you just want two tabs on a spreadsheet. One is your income, so the date, you reference maybe your invoice number, who it was for, the amount, and if you want to do a paid tick column, you could do that. And then you want another page that is expenses and purchases, and just again, date, what it was for, the amount it was for. It's as simple as that. And then right at the bottom, when you've got everything in, you can just do a formula and add them up. If you are keeping a mileage log, you could keep a third tab for your mileage in the same place, and then just drag that mileage figure into as one line on your expenses sheet. But so just remember, everything you claim needs to be wholly and exclusively to be, and there are rules on what is allowable and what is not allowable. So if you haven't got a list, then you can start putting that together now. Loans and borrowings. I mentioned loans earlier and said I'd come back to it. So if you borrow money, and this is from anybody, this could be from the bank, it could be from an online lender, it could be from your gran, it could be you putting money into your business yourself. So you've borrowed £1,200. That £1,200 is not income, as I said, and you're going to repay it over 12 months because that would be £100 a month, and that's doable for you. But actually you're going to pay £110 a month because there's interest on it. So the £10 a month is an allowable business expense because it's interest on the borrowing for your business. The £100 is not, because that is just repayment of the money that you borrowed. And that's about as simple as I can make that. So if you've got any questions on that, give me a shout. Limits. I'm not going to go a lot into VAT because I know for most of you this actually doesn't apply. This here on the left hand side is the HMRC's definition of if a private tuition is provided by a sole proprietor, the income is exempt from VAT. So if there was just you providing tutoring, then you're never going to have to worry about VAT. If, however, you employ people to do that for you, or you subcontract, then it becomes more than the threshold, which for 23-24 was 85, it's going up to 90. And remember that this is a rolling 12-month period, not a tax year. Then it's going to become VAT may apply. As I say, I'm not going to go into that a lot. But if you are VAT registered, then you are probably already using an online account system. And the reports that you will get off of that to put into your self-assessment will give you the figures net of VAT. So you do not include VAT in the numbers in the income and the expense that you are declaring for self-assessment. So that's all I wanted to say on that. If anybody wants to talk about VAT, I can do that separately. The other limit to be aware of is, one of the questions you'll get asked is, did you put your numbers in based on cash basis? And it's either cash basis or it's traditional accounting. Basically, cash basis means that you're going to count the money when it comes in and the money when it goes out, regardless of the date on the bit of paper. Traditional accounting goes on the dates on the bits of paper, regardless of when you got the money in. And the only time really, because I'm thinking that none of you are waiting, for 8-12 weeks to get paid once you've raised an invoice, so once you've done the work, the only time this is going to be at all relevant is if you maybe raised an invoice on the 31st of March and you didn't get it paid until the middle of April. You need to choose whether that's going to be included in the earlier year because the invoice is dated then, or in the later year because that's when the money came in. And if you choose the later year when the money comes in, that's cash basis. That's all that means. So you just have to be consistent with it and make sure that if you do have these things that go over year end, that whatever you choose to do this year, you remember that that's what you did last year, and that's what the tick box is for, so that you don't either forget something or you don't count it twice, because you wouldn't want to count it twice, would you? There are some restrictions on cash basis. If your finance charges and interest charges are more than £500, you cannot use cash basis. To go into cash basis, your income when you first begin has got to be less than 150,000, and it has to stay under 300,000 all the time you're doing it. I'm suggesting if you have turnover of income of more than 150,000, then you probably should be speaking to an accountant anyway, because you are going to have other tax issues that are coming into play, and at that level you need that expert advice. So you shouldn't really be doing your own tax return. Extra expenses. These are the things that you have purchased for your business or that you have incurred as a cost in your business that you haven't got a piece of paper for. You know, it isn't stationery or resources that you have bought or CPD or training. This is things that you just use because we all use them, but you probably pay for them personally. So working from home allowance, a bit like the motor expenses, there's two ways of doing this, but quite honestly, again, the simplified version is just really what most people use. And depending on how many hours a month you work from home, depends on whether you can claim £10, £18 or £26 for that month. And it doesn't have to be the same every month. So if you have a really busy month and you work 100 and odd hours from home, that could be 26. If you have a really quiet month and you only work 30 hours a month, that month, it's £10. You don't have to keep a log. You don't have to prove this, you know, to the nth degree. Just be sensible about it. I work from home all day, every day, so I claim £26 a month. I work with a lot of locums who do their admin from home, and they look for work from home, and they do their invoicing and things from home, but they actually physically go out to their clients' premises most of the days. They only claim £10 a month. It's just a little thing against your energy costs. You could, if you wanted to, take all your energy costs and divide them by the number of rooms in your house, and then divide them by the amount of time that you work from home, and you could work it out that way. But honestly, if you've got time for that, go for it. I'm not that worried because I'd have to be paying those bills anyway. And the other two things that you probably pay for personally, but you use as part of your business, are your mobile phone and your broadband at home. So mobile phone is just really a case of you're going to take a reasonable guesstimate on how much of the use of your mobile phone is for the business. Now, I have a dual SIM phone, so I just put one through the business and one I pay for personally, and it doesn't matter if sometimes they get mixed up. If you've only got one number, take this percentage guess, claim that amount of your tariff every month, and stick that on a line on your purchases spreadsheet. Home broadband, again, you're going to use some of that if you do admin from home, particularly if you hold classes over Zoom or whatever. So again, it's a reasonable guesstimate of how much of the use of the home broadband. So be careful if you've got one of these consolidated bills with lots of other things on it. It's just the broadband bit, and your percentage use is probably going to depend on other people in the house. In my house, there's only me and my husband, and he's retired. I'm here all day, every day, so I claim 75% of hours. If we had 5 teenage children all doing whatever it is teenage children do these days, and streaming and gaming and music and whatever else, then my business percentage use would be much less. It'd be like 10%. All of these things added together are really literally only a few pounds, but at the end of the day, it will reduce your tax bill. So it is worth just taking a few minutes and shoving those on your list. Okay, So that's the things for the self-employment bit, and other things that you can do to save money and to pay less tax. There are some things called tax reliefs, which these are legal schemes, and we've all heard about the illegal schemes to not pay tax, but these are legal schemes to pay less tax, sometimes called tax incentives. And then we have tax allowances, which are amounts of money that you said, right, okay, you can have that amount and you can either pay no tax or reduce tax, depending on specific situations. So the one that we've literally just been talking about for self-employed is your expenses are a tax relief because they are deducted from your income, so you only pay tax on the profit. So as claim those expenses, those legitimate expenses that you're entitled to, claim them because it will reduce the tax you have to pay. The other tax-free allowance that we all get is we have a tax-free allowance for income tax, and most people it's £12,570 a year. And if you're employed, you have a tax code that tells your employer how much you can earn before they have to start taking tax and national insurance from you. And your tax code is, if that is your tax-free allowance, it'll be 1257L. But it could be different if you have benefits in kind, so like a company car, or they provide accommodation to you, or you have health insurance or medical cover. The value of that benefit will be taxed, so they will reduce your tax code by that value. If you have underpaid tax in a previous year, then they may have altered your tax code as well to be able to claim that, to claw that back from you. So one of the things I would suggest you do is log into your HMRC tax account, which is what we did at the very beginning, check your tax code and check that it is correct. And if it's not correct, now's the time to do something about it. Another one is marriage allowance. This does only apply to people who are married or in a civil partnership, not just living together, I'm afraid. But if one partner does not earn up to their tax-free allowance, then they can transfer 10% of that to the partner who does earn more. And that can be worth, if it's the whole amount, up to £252 a year. And the beauty of this one is you can backdate it for 4 years. So if that is the situation that you find yourself in and you've not already done this, I would recommend you do this now before next Friday, because the 4 years changes at the end of the tax year. So right now you can go back to year 2019, 2020, and you could claim if that has been, if you've met the criteria for all of those years, you could get a check for £1,000-ish. That'd be nice. And that, once you've transferred marriage allowance, it stays until it's cancelled. So if circumstances change and that lower earning partner is no longer earning less than their tax-free allowance, then you're probably as well to cancel it so that you're both on a normal tax code, because you are not going to benefit, you won't benefit either way, because they'll pay tax at a lower threshold and the higher earning person will pay tax at a higher threshold, whereas if they were both on a normal one, there's no benefit. So again, check your HMRC tax account to see if that's in place. And if you want to put it in place, I think you can do it on your tax account or you can ring them. And if you want to go back to 1920, do it now. Otherwise, you will lose that £252 for that year. Uniform allowance probably is going to apply to most of you, unless you do have fleeces or shirts or something that have your own logo on them. But particularly if you're an employee that has a uniform, and this has to be branded or it has to be protective clothing, which again, maybe if you're a science teacher that might apply. And it's if you are responsible for the laundry and repairs of your uniform that has been provided to you. As an employee, they give you like £60 a year, which is worth like £12 in tax. It's not huge. Some occupations get more than that. There is a huge long list, so you could have a look at that. And again, this is one of these where you can backdate it for 4 years. So again, if it's going to apply, do it now, and it will stay until it's cancelled. So if it no longer applies, you should be telling them that they need to take it off. As far as self-employed people, sole traders are concerned, if you do provide yourself with branded PPE, there's a couple of different ways you can do this. You could either like buy yourself a box of detergent and use that and put that receipt in, and then work out how many times a week you have to wash this uniform and what your washing machine's energy and water usage is, and put that in. Or I would say just put 60 quid in, the same as what an employee would, on your expenses. That'll be fine. But just remember, it does have to be branded or PPE. It can't just be clothes that you buy to wear for work, unfortunately. So, right, we all have an annual savings allowance, and every year we're allowed to put £20,000 into tax-free savings accounts, so ISAs. Now, there are cash ISAs, there are stocks and shares ISAs, and they're open to anybody. And generally speaking, you can put the money in, withdraw it anytime you like, but you can get some that are paying more than 5% these days for easy access, which means that it's not tied up for a year or 2 years. You can go and get it, subject, there'll be some rules around it. But you should be able to then get that back when you need to pay your tax bill, if that's what you're saving it for. Then there are things like lifetime, there's a lifetime ISA if you're of ages between 18 and 39. Now that pays, as well as the interest that you're going to get on the ISA, the government adds, when you draw it out, 25% tax-free to that. But the lifetime ISA could only be used if you're buying your first home or if you're retiring. So that is a bit more restrictive, and you're only allowed to put £4,000 a year into it. But if you've put £4,000 a year into that, then you can also have, for instance, a cash ISA, but then you'd only have £16,000 to put in that. So you just have to do this little bit of juggling to work out what's going to be best for you, short term and long term, and what's going to pay you the best interest. So if you have interest in savings accounts, I would go and check what you're getting paid, because on any savings account, if you're getting less than, say, 3.5%, 4%, you can probably do better. And the great one for this is Martin Lewis, the chap from the TV, money saving expert. He has a very comprehensive page on his website that is updated daily, that gives you all the best places to put your money depending on how much you've got. Is it going to be regular saving every month, or is it a lump sum? How soon you need access, how you want to manage it, whether it's in branch or online or on your phone. And it's a treasure trove of information on there. But you can easily get 5% on all of your savings with just probably a little bit of juggling about. But if you have money sat, especially if you've got money in savings accounts that's already earning you more than £1,000 in the year, and you have other money that you want to earn interest on but without paying tax, ISAs are great for that. But that £20,000 for the year will stop on the 5th of April. So you could put £20,000 in now, and you could put another £20,000 in April. But if you wait till the 6th of April, you'll lose the ability to use this year's allowance. Pensions allowances. Pensions, again, are another no-brainer, particularly if you are a higher rate taxpayer. So if your taxable earnings are more than £50,270. Now, remember, I'm not a financial advisor, but I do know that you can put up to £60,000 a year into pensions and on a tax-free. Now, that sounds like an awful lot of money to most of us, but if you had inherited some money, or you had won something on the lottery, then it was something you would probably consider, because you get tax relief on the contributions. If you have a pension through an employer, that's usually done at source. So they will deduct your pension contribution from your salary before they then tax you on the rest. So you've effectively put that money in tax-free. However, that's probably usually only at 20%. No, it wouldn't be. No, as employer, might be 20%. Yeah, you need the piece of paper from the pension provider that tells you how much has been put in this year and how much tax relief they have claimed for you. If you have a personal pension scheme, you're going to want, again, the piece of paper from the provider at the end of the year that says you have paid so much in, because that contribution you are going to be able to put into your tax return and you're going to get tax relief on it. So if they've already claimed tax relief from the government's put their extra bit into your pension pot, your statement will tell you, then at 20%, what it will do for the extra 20%, if you're a higher rate taxpayer, is it extends that band that you pay 20% tax on, so that you don't start paying 40% till much higher. So as I say, as a higher rate taxpayer, having a pension is an absolute no-brainer. So I would suggest, check, have you got pensions? Are you getting the tax relief? Is it in place? Get the statement. If you haven't got pension and believe it's a good idea for you, speak to an IFA as soon as you can. I suggest on the 27th of March now, we're probably pushing it to get one in place for the 5th of April, but you can obviously, it needs doing as soon as you can for the next year. And that's basically it. I said it'd be a whistle-stop tour. I know it's not absolutely everything that you could do to save tax, but it is the most common things that you could do. There is another masterclass, general one that I'm running on the 8th of April, which is actually about doing your tax return. So that one will go into more detail on the actual pages that you will see once you log in and what needs to go where. So the sign up link for that is there. It is free, and anybody that registers will get the replay whether or not they attend live. So that's that.
Do you drop that into the chat, Tracey?
Is that if you are doing your tax return yourself and you just want a little bit of support, you want your hand holding, particularly if it's your first one, if you want to sense check that actually you've put the right numbers in the right boxes, I'm happy to do a one-to-one Zoom share screen. Once you've had a go, and remember, have a go but don't press submit, we can go through absolutely everything and just check that it's all right before you do submit it. If you do want to do that in, say, April, May or June, I'd suggest you maybe book now, because there's only one of me, and when the slots are gone, they're gone, because I haven't worked out how to clone myself yet. If it's going to be later on in the summer, you're probably going to be okay. If you book a time and date and then find that you just can't, you're not ready, you can reschedule without any problems at all. So, and very, very finally, if you have got any questions anytime, please ask me. There is no such thing, as I'm sure you all are aware, as a stupid question, only the one that you do not ask. You can WhatsApp me, you can message me, you can send me a message on QT, you can email me, just ask the question. Even if you think you should know, even if you are sure I've told you before, doesn't matter, just ask the question, please. And that's it from me. So if I stop sharing and find Hannah. Hannah's
me.
there.
Hello.
Oh, hang on.
Thank you so much, Tracey.
So let me go back on again.
The joys of technology.
Oh, yeah.
So as you may have seen in the chat, can you also share the masterclass link for us? I've shared the bit.ly to book in the 60 minutes.
Right, yes, I can do that. Bear with me 1 second.
Thank you. Did anyone have any questions? We have about 5 minutes left for you guys if you'd like to ask any questions of Tracey.
Yes, I went on a bit, didn't I? That's that one, isn't it? Control C.
Oh no, it was all valuable points. I think you'll probably see all of us were taking notes, vigorous notes. So did anyone have any questions themselves in the room?
Or did I just completely, they're all just a bit mind blown now, because I know it's very whistle stop and it rattles through lots and lots of things. But it's kind of the only way I can do it, really, because nobody wants to be sat here for hours. So yeah, so I think, has that gone in? Yes, it has gone in, hasn't it? Yes. So yes, because I only get to do one of these sessions. Is it once a term I get to do one of these?
Yeah, but I think these are always such invaluable things, and especially seeing as tax year end is next week.
Yeah, it's
Joyously during the Easter half term, I'm sure all of us have enough things on our plates just to add to it. But I mean, for me, I think the pension part was something that was really important. That when I got an IFA, they were like, "Are you paying to pensions?" And I was like, "No." But the savings it can provide, even if you can put away just a little bit, it makes a massive difference. What would you advise for us to put away in savings, other than as much as you possibly can?
Well, yeah. I mean, if it's that you are a sole trader and you are saving for your tax and national insurance bill, then if this is your only income, then I would be suggesting, particularly in the first year, that you put away about 40%. Because if it's your first year, you're going to get that horrible shock of that payment on account. And in January, you're going to have to pay 150%. Dee's nodding there, like she's like, she got hit with this already. Yeah, so that's for the first year, I'd be saying 40%. If you've got a student loan that you know that you're going to end up repaying, you're going to have to save more because you're going to have to pay that as well. After the first year, you can probably reduce that a little bit to maybe 30% and student loan, but really it's going to depend on the amount of expenses that you've got, so what your profitable thing is. I mean, the worst case scenario is save 40%, and if you've got lots left that you don't need, either it can go against next year's and you don't have to save so much, or you've got a nice little savings pot there and you can go on holiday or go out for dinner or go and get a cup of coffee and a piece of cake, depending on how much it is extra that you've saved. But it's always better to save more than not enough, which is why I do say that, particularly in your first year, do it as soon as you can, because that payment on account can be a bit of a shock.
Yeah, I saw you unmuted yourself. Did you have a question? Just to pick on you. No.
I'm all good. I've got one, but I think I just zoned out briefly while I was writing some notes. So I'm just going to go back to that bit of recording and if I've got a question after that, then I'll contact Tracey. So
yeah, no, not a problem at all. Yeah, do that.
Thank you, Tracey.
Okay.
I have spoken one-to-one with Tracey, and she's brilliant. So yeah, she's Tracey's awesome. So use her expertise.
Okay. I mean, I don't know it. I don't profess to know even half of what there is to know. Not even an inkling of what there is to know, but I do have access to lots of other accountants and experts and people that do know lots more than I do, so I will always, if I don't know, go and try and find out for you. But one of my expertise is I can generally find my way around HMRC's website better than most, because I spend so much time on there. So sometimes it's not always easy to know. It's one of those websites where you have to use certain words, and if you don't know the words to use, you can't find the information that you want, and that's the frustrating thing. None of us knows what we don't know, so they don't make it easy. So
thank you, Tracey. I mean, even hearing that from someone who uses it so often has put me at ease.
It's a nightmare, and they decided they've been running different tests on which phone lines are mostly used, and then doing so. So I don't know if you're aware, they had actually closed the self-assessment helpline from October last year until the 1st of February, which is when half the people that do a self-assessment tax return do one in January, and there was no helpline to ring. So they've now decided that they're going to actually close it. They're going to close it from October to sort of like April every year or something stupid. And there was such a backlash that within 24 hours they just reversed that decision and said, no, we won't do that. But the unfortunate reality is that even if you do ring them, you're likely to be on hold anything up to an hour before you get answered. And then if you do get answered, they've got so many untrained staff that you're not it's possible you're not even going to get the right information.
Okay.
That's the scary bit.
That is the scary bit. Well, thank you, Tracey. Again, I mean, you've put me at ease with just sharing that as an expert, you know what we're going through. But thank you, everybody. This will also be available for all our members in the recorded space. I've put the link into our community area as well, so we can book into the masterclass or to the 60 minutes with you. I know how important and how helpful it is just to have someone by your side as you do these. So Thank you, everybody, for joining us today and for bearing with as I am not Julia. Tomorrow we have book club where we're discussing the 4 agreements, and Julia will be there. If you have any questions of Tracey, just ping us a message, or Tracey, if you can pop in the chat your best email address. And I hope we're going to have a moment to chill. And if you need anything at all, give us a shout. And thank you, Dee. Thank you, Emma. Thank you, Louisa. And thank you, Coco, for joining us today. Thank you.